Welcome to The Explainer. Today, we are tackling a classic stock market puzzle. You know, the big one. What's actually more important? Is it massive growth potential, or is it, actual hard cash in the bank? We're going to explore that very question by putting two fintech giants, Upstart and Pagaya, head-to-head. Let's see what their financial data really tells us.
All right, so let's meet our contenders. In one corner, we've got Upstart Holdings, that's ticker UPST. And in the other corner, Pagaya Technologies, ticker PGY. It's time to see how they really stack up. So we've set this up just like a classic boxing match. First, we'll meet the competitors. Then we'll jump into round one, their market footprint. After that, round two is all about financial performance. Round three will cover ownership and value. And finally, we'll wrap it all up with the final scorecard. Let's get into it.
All right, first up, let's get a quick introduction to the two companies stepping into the ring.
So at a high level, both Upstart and Pagaya are basically playing in the same sandbox, right? They're both leveraging technology, specifically AI, to really shake up the lending and asset management space. But, and this is the key thing, as we're about to see, even though their goals are similar, their financial playbooks, well, they couldn't be more different.
Okay, ding ding. Round one. This is all about their market footprint. We're going to look at their size, valuation, and just how the market currently sizes up these two competitors. Let's go.
And right out of the gate, Upstart comes in swinging like the heavyweight. I mean, look at that, a market capitalization of over $4 billion. Now, in simple terms, that's just what the stock market thinks the whole company is worth, and that is a huge number.
And this chart really puts that size difference into perspective. You can see Pagaya's market cap, which is still substantial, right? We're talking nearly $2 billion, but it's less than half of Upstart's. So when it comes to sheer market size, round one is looking like a commanding lead for Upstart.
Okay, but here's where the story gets really, really interesting. This table, it basically shows the wild ride investors have been on with both of these stocks. I mean, both have seen huge swings. Just look at Pagaya for a second. It climbed dramatically from a low of just over $9 to more than 36. What does that tell you? It tells you there is a ton of action and volatility in these names.
All right, time for round two, financial performance. Now, we're going to look past all that market hype and get right into the engine room of these companies. The big question, are they actually making any money?
And whoa, here is a huge plot twist. We're looking at EBITDA here. That's a key measure of a company's core profitability. And just look at this chart. Pagaya is solidly in the black, pulling in over $176 million. Meanwhile, Upstart, despite its massive market value, is actually losing money on this metric. This is a totally different picture from what we saw in round one, isn't it?
And that trend just keeps on going when we look at operating income. This is basically the profit a company makes from its main day-to-day business. And again, you see it right there. Pagaya is showing a healthy profit of over $145 million, while Upstart is still in the red.
And the final punch in this round, maybe the most important one, comes from free cash flow. Now, this is a super important metric. It's the actual cash a company has left over after paying for all its operations. You can think of it as the money it can use to invest or expand or maybe return to shareholders. And look, Pagaya is generating over $106 million in cold, hard cash. Upstart, on the other hand, is burning through it. So, based purely on profitability in this round, Pagaya is the undisputed winner, no question.
Okay, time for round three, ownership and value. So, we've seen how the market values them, and we've seen whether they're profitable. Now, let's switch gears and look at this from an individual investor's perspective. Who actually owns these companies, and what's the value behind each share?
So if we look at Upstart, you can see that a whopping 86, almost 87% of its shares are what's called free float. And all that really means is that a huge chunk of the company is out there, owned by the general public, trading every single day on the stock market. Now compare that to Pagaya. It's got a slightly smaller portion of its shares available for public trading. That larger slice of closely held shares you see there, that just means that insiders and big institutional holders control a much more significant stake in the company.
Now this table, this is where we really get into the trade-offs. We're looking at value on a per-share basis. So on one hand, Upstart has a higher book value. That's kind of like the company's net worth on paper. And it has more cash backing up each share. But, and this is a big but, it's also carrying significantly more debt per share than Pagaya is. So with Upstart, you're getting more assets, but you're also taking on more risk.
So, after 3 pretty intense rounds, the bell is rung. It's time to go to the final scorecard and see where each of these companies landed their biggest punches.
And really, it all comes down to this clear split we've seen throughout the analysis. On one side, Upstart's advantages are all about market size, that big valuation, and shareholder metrics like having more cash per share. But on the other side, Pagaya's strengths are firmly rooted in something else entirely: current profitability and its ability to generate that positive cash flow.
And that leaves us with one final big question. And this really gets to the heart of what investing's all about. The data tells two completely different stories, doesn't it? On one hand, you have the story of aggressive growth, a company the market loves, betting big on its future potential. On the other hand, you have a story of, let's say, quiet, disciplined profitability right now. So the question we'll leave you with is, which story do you believe in more?